So I took my first short positions today. In fact, I only play short today. Prematurely, I was gonna wait till Wednesday, but then I realized that Jerome Powell was gonna talk pre-market tomorrow. So I was thinking, okay, let's go ahead and start, considering going short because we have a wicked rally since I first stated, which is back in here. I stated to be bullish, so November 1st, that's Wednesday of last week. And I was maintaining bullish, so I didn't have to, post any additional videos. But now that I have a position, I was going short throughout the whole day. Did not go long, which again, I'm not the perfect trader. Obviously, this is very technical. You can see the futures were down, I guess, and that spooked me a little bit. Then it get open, I guess, flat, hit down, support at the 5 minute, and rally all the way up. Now, I did feel some pain because somewhere along the line, I think I timed it right at 46 and a half. I'm beginning to notice that they're reacting off of these round numbers. So like, 434 and a half here. There's some reaction right here at 435 and a half. And again at 436, so reaction 436 and a half. So I started going short at 46 and a half, and then added along the way up. Obviously, felt pain. When you miss time like this is called missing timing because I timed it incorrectly. You're gonna be down 3, 4, 5,000 depending on how bad it could be. So if I were to pull this up, I think I was playing. Uh, well, I know I was playing November 8th, but I forget exactly. But I know it was multiple ones. But let's just pick 437, and you can see. Well, this is the 5 minute, or this is the 15 minute. I'll go ahead and pull up the 5 minute to show you that along the way, if you have like 18,000 here, that's so that's 16,000 or 6,000 you could be down. So I mean, obviously, if you hold it, you make it all the way up, especially if you add it along the way. But the point I'm saying is that you're gonna be down a lot if you miss time, and that's one of my pet peeves is missing timing. Obviously, I missed time, but still, I made made gains here, and made gains here, but miss all of the longs, which is very frustrating. I should have went long along several points. You can see at this point, I just wasn't around, so I missed that. If I saw that, I would have went long. But yesterday, you can see the effect of 0 day to expiration, 0 DTE. At the very end, it shot up. And also today, you can see this effect of 0 day to expiration. So this confirmation that, they are going to, still play a big effect. The as far as the price movement toward the end of the day. I did hold a short position, uh, here. So I sold one lot of call options right at this point. And the reason why I did that is because on the monthly, you can see that the monthly went from the 20-month moving average to the 5-month moving average. And the last time it did that, where it hit the 20-month moving average, and this is back in April of last year, bounced close to the 5-month moving average before retracing all the way back. So this is a huge rally or a huge V shape. And normally when you have a huge V shape like this, it doesn't keep going up, not without a pause. Especially tomorrow is reversal Wednesday with Jerome Powell speaking. He will be speaking tomorrow morning, I believe. So where's Jerome Powell? Oh, Wednesday. Where are you, Jerome Powell? Chairman Fed Jerome Powell will speak, pre-market. Oh wait, this is, yeah, I forget when the market opened, but this could be after the market, I guess. And then he speak again at 1400 on Thursday. So the only data that's going to be important is these um, continuing jobless claims and initial jobless claims, as well as I guess the jobless claim 4-week moving average. But those are gonna take a a back seat to what Jerome Powell is gonna say. So I'm expecting whatever he says, it's going to be treated as negative only because it has rallied this far, and the previous time it rallied this far, rally like that was like here, right? This is April of last year. Then it went down. Well, you got a doji all the way up to um, this 20-day moving average. So very technical back then. Still technical today, but not as technical, right? Right now, I mean, you can say, is this a significant level? It is. It is a significant level because it hit right at 4,400 on the ES, and that is when I went. I held my short, and I don't have any long position at this point. I sold out. So also you can see the 10-year bond has, I guess, kind of played in the sense that it reacting off of this. I guess this is the 50-day moving average. I need to put a little bit more moving averages, but going with the 4 hour, you can see it bounce up here, and I'm expecting this to bounce up to this level on Jerome Powell. So that is forward looking analysis. I keep saying there's three um, components of a successful trader, and that is fundamental, which doesn't really change that much, and it can be interpreted. I'm not going to go through the fundamental of the economy or the stock market at this point. So the other two things being technical analysis and forward-looking analysis. So forward-looking analysis is the one thing that I do successfully that you really don't see any of the other channel talk about. So the continuing jobless claims, we're gonna say, let's just assume that this is gonna continue to trend upward, and this is going to be on Thursday, right? So I am probably going to be only bearish for one day, and that is because of Jerome Powell on 9:15. Well, probably by the afternoon, I will cover that short. Oh, I don't know if I cover that short. I might do a straddle. I might do a second leg and have an even straddle of longs and shorts. Meaning, right now I have some call options that I sold, or one lot of call options that I sold, and therefore I will sell one lot of put options, maybe two, maybe two. So yeah, so this I'm expecting to be continuing jobless claim, which is on Thursday, and I'm expecting that to continue to go up, which would be, is that continuing jobless claim? Yes, so that would be positive for the stock market. This is initial jobless claims. I don't know if this really matters so much, honestly. And then the jobless claim for a week. This is gonna be important. So it's just gonna go higher, most likely, most likely. Um, why not? It's trending sort of upward, right? So that's positive forward-looking analysis. And of course, Friday you got the consumer sentiment. These inflation numbers may be negative, right? Maybe negative on the inflation numbers. Consumer sentiment, hard to say. Could be negative as well. I'm expecting the consumer sentiment. Yeah, so I am expecting it to be negative because you can see it's trending downward. So negative consumer sentiment on Friday, and positive or higher inflation numbers. So Friday should be a down day. So we have down on reversal Wednesday, which means it's gonna go the opposite of the current trend. So it should be somewhat of a retracement here. Should be somewhat of a retracement. I don't know to what level it may be. Bounce on Thursday. I don't know, maybe, and then a reversal again on Friday. Now that Thursday may be a little bit tricky because what if I'm wrong on this number? And what's the chance of me being wrong on this number and that the initial jobless claims are less than expectation? Is this for November? Let's take a look. So 1 year. This is for, I guess it's for that week of November. You know what? I don't think there is gonna be a high jobless claim because we're going toward the season of the holiday seasons, which is Black Friday. And they're gonna be hiring, and so jobless claims may be less. Maybe less. So this may be a negative reversal of the trend, a seasonal reversal of the trend. Now, I don't know if I can find of last year where November is. It's gonna be hard for me to kind of find it, but it's probably somewhere around here. And those numbers are down here anyway, so it doesn't matter. But yeah, it could be a reversal due to the fact that it is the seasonality, and it's only for this, but that could be going next week. But still, it could be this week as well. So this could be a negative number, meaning it'll be negative for the stock market. In addition to that, you got Jerome Powell speaking again. These number, the Michigan inflation numbers are going to be negative for the stock market, and the consumer sentiment may also be negative. In fact, I'm forecasting it to be negative. So yeah, I would say it's a decent, decent logical reasoning to be negative or bearish for at least the short term. And I am a little bit, yes, today I was a little bit eager to go short, so I missed that today. But tomorrow I'm definitely gonna continue to short intraday as well as hold my short position. I'm expecting this. I don't know. I don't know where the technicals are gonna end. It depends on how all this looks in regards to the options. Now the option was strong on the call options today. I noticed that until the puts came up, but toward most of the day, it was very strong on the call options. And I want to go through that real quick because I was noticing that there's just a lot of volume being bought up through all these guys, right? Throughout the whole day, it was like very lots of volumes. So that's why I didn't go short until the very end. The very end is when I went. As far as holding long term, I didn't go short until It got up to 4,400, I believe. On the ES was when I went short. Um, but yeah, still disappointed I didn't go long. I probably won't go long tomorrow. Now that I'm thinking about it, just worry about it being a big sell off with Jerome Powell, and so playing short would probably be the right thing to do. Otherwise, you might get trapped or tricked. Now, the thing is, the bulls have been very strong. So I'm not gonna say that the risk is very high for going long because obviously the bulls have been so strong. You can see this trend line, right? I mean, it's not gonna meet up with this trend line. I mean, I guess it could meet up tomorrow, right? So, but yeah, I'm expecting it to fail the 5 minute. Potentially, since it is reversal Wednesday, if it ends low of day, it will meet up with the 15. So yeah, potentially uh, it could go low of day. And when I mean low of day, I mean it'll end the low of the day, kind of like this guy. And there's probably gonna be a little doji now because the bulls have been so strong. So and of course, 0 day to expiration, you can see it went all the way. If you look at the 1 minute, you know, at one point, when I shorted like this whole thing right there, I was up a couple of grand, just and I didn't cover, uh, just because I was decided to hold those call option that I sold. Yeah, I'm stupid because well, I don't know if it's stupid. It's just poor management, right? Because I could have easily covered and then re-shorted. But regardless, this whole 0 day to expiration do show you that the longs are still very strong. So because the longs are so very strong, I don't think you're gonna get any low of day close tomorrow. Probably if there is a somewhat of a sell off where it hits or it meets the 15, there's gonna be the bounce on the 15. Where would the 15 come? Well, the rate of this 15 is going up, right? So even number is probably where they're gonna meet up, and so it could be 43.50 on the SPX. Does that translate to anything on the SPY? Could be, maybe not. But yeah, even number, maybe it comes to 430, 434 is when it meets up. If it's the SPY or the SPX, which is the S&P 500, you can see that it's still reacting off of these even numbers, right? And this one, it did not get to it, and that's because the ES went to 4,400, which is the futures of the S&P 500. Um, let's go over the indexes. Everything's looking bullish right now. There are some bearish component like the IWM, which is the Russell 2000 XLF, showing something here. But everything else is bullish. Commodities going down. Oil is now right at this. So actually, if I had saw this, I probably would have bought this guy because I'm expecting a bounce in the air. So I might have, well, I don't know, this guy's tricky, right? But it is at this level right here. So there could be a bounce. And BNO, let's see where BNO is at. BNO is right at the 200-day moving average, which is, gosh, I guess, nope, it's still got a way to go. I don't think this guy is actually updated. Yeah, I guess it is kind of updated. So it's at this level right here. Yeah, nothing else on this chart. And the individual, the magnificent. Apple is at a level, I guess. Did it get to it? Did it get to it? Let's look at Apple. Let's look at the big caps. So, no, it did not get to it. It did not get to it. So it didn't get to it. Microsoft has been strong. Nvidia will get to this level, and probably go up to this. Meta, Google's. I guess Google is a short at this point right here. So I mean, because Google has been the weakest of the Magnificent Sevens, right? If you look at the Magnificent Sevens, they all pretty much beat. And because Google has been outperforming, it is the weakest. I did have Lilly in my 401k, sold out a few days ago. Uh, so yeah, I missed a lot of opportunities on Lilly. Costco, Johnson& and Johnson, nothing to write home about. I think that is it as far as technical analysis and forward-looking analysis. I'm not going to talk about fundamentals. Pointless to talk about fundamentals because it's not right now. It's not the best time to talk about. But these guys, yeah, there wasn't anything of particular value. Big tech breakout trap. Uh, um, this guy's always negative, and you know what? It's so difficult for me to watch all these videos because, only like 5%, if that much, is of any value to me. Most of them are just charts that really don't mean much. But yeah, so I need to really pay attention to the technicals tomorrow because I did get tricked not playing the long, so I need to be careful on not playing the long tomorrow because I may have to play the long because I'm expecting some big movements tomorrow. It's reversal Wednesday, so there's gonna be some big movements. And normally the options will give me some signals, especially and the 1 minute. On the 1 minute, I need to pay attention to the spreads. The bid and the ask will tell you if the bid and the ask are like a couple of basis points away from each, like it's a large spread. That's gonna be pretty negative. And then of course these put options are probably gonna start coming in tomorrow once Jerome starts speaking. I'm expecting some sort of a try to be scare out the longs, right? I don't know what the reverse of a squeeze, but short stop hunting. Shorts are gonna hunt for some stops or level huntings, right? So ultimately, I am expecting the 15 on the SPX to meet up this 15-minute trend line, which is probably around 43.50 along the way. May take some longs, who knows? But yeah, I guess I will have to title it bearish for Wednesday.